He said, all of my friends who have crushed it have three things in common. One, they're hyper-focused. Two, they're relentless and willing to outwork the competition. And three, they focus on building a network where everyone can win. And I just thought that so resonated with my journey. Hey, welcome everyone to the Real Estate CEO Mastermind. Pumped that you're here. Excited for today. We're gonna do a live Q&A. I want to make sure we're answering questions for one another. I even have some questions for you. By the way, is anyone that is here today, anyone raised over $5 million from private investors? I want to ask you a question. Who has invested or who has raised more than brought in a few investors on deals? One of the things I'm learning, and I'll just speak from my experience in this last deal we did, and then we can go back and forth here. Is the process of raising capital is interesting. We've been talking about raising capital for the last couple of weeks. By the way, if you missed any of these recordings we did last week, we did a whole 5 steps on conversion and the 5 different points of conversion in the capital raising process. If you thought that was good content, let me know. But I thought those were 5 things that we've learned how to continue to have folks say yes and show up for you in projects. But on this last one, we just put out an offering this week. We raised the funds. We had people commit. But here's what I learned, and I want to pass this on to you, and especially for those who are coming to the workshop this week. We can talk about this in person because I'm curious to get Dan's input on this as well. But what we've always done is like a soft commit. And so we do like a soft commitment, which then we give them access to our portal. And then on the portal, they can subscribe to our offering, and that's where the wire instructions is, etc. Well, I did something, we did the soft commit, which we, filled very quickly. And then we have the work of like taking them from a soft commitment and going onto our portal. And what I'm realizing is that, and this is why I want to ask you guys have ever done this as you start to raise more money. What I'm learning is that I think that we should continue to create urgency through the entire subscription process. So what we did was like, hey, commit through this Google form, essentially is what it is, was our process. Go to this Google form, fill out your information, put in your commitment, and then we'll give you access to our portal. So we filled that up in like 24 hours, like I said, but we kind of lost the urgency because once they committed on the Google form, they still yet hadn't gotten to our portal to sign subscription documents. And so we've kind of lost the urgency through our project. Now we're filled, and I'm calling people, and people are like, yeah, I want to do it. I'm in, but I haven't got to it yet. Where if I was able to keep urgency throughout the whole process and not necessarily say, hey, your spot is saved until we have the subscription document signed and money in, then we're able to continue to promote the deal and create urgency all the way through. And honestly, hopefully speeds people up to get into our portal as an investor. And so that's what I wanted to ask you. If you have ever invested in deals, gone through a portal, signed subscription documents, what that process has been like for you, because it's something that we're learning. I think is having an online portal and access like that is something really nice to have from an investor standpoint, even from my standpoint, because I don't have to just hold someone's hand the whole way through. But I'm learning that we just need to be more efficient. We need to be more efficient in figuring this out. Because, as we're talking about capital, we talked about last week the points of conversion. And I talked about if you want to win this game, the best way, the way to just wow your investors is to provide service, right? Is just to be the best service provider from a capital standpoint in the industry. I don't think you can lose. And so I'm like, can we get our process to be more efficient so we can be one of the best service-oriented capital companies in the nation, right? Where our investors rave about us. Let me ask you guys this question. Put in the chat here, on a scale of 1 to 10, how would you rate your company from a service standpoint on a scale of 1 to 10 in the way that you interact, the way that you communicate, the way that you bring in funds, the way that you how would you rate your company right now on a scale of 1 to 10, and just in terms of service to your clients or to your investors? If you ask them, what would they give you on a scale of 1 to 10? Because I'm pretty sure that we all got some room to grow here in terms of becoming a more efficient, more service-oriented capital raising company if we're going to do bigger deals together. For your own process, consider that. I like the soft commit form. Again, so if you're just joining, welcome everyone. My name's Ellis. I'm a full-time investor, run a syndication company, a private equity firm, and in a mastermind called Kingdom Real Estate Investors. And so I'm just learning and sharing the things that we're learning as we're doing deals, as well as from our community. And if you're just joining, I share that our process when essentially going out and raising money is we have a soft commitment form, which essentially kind of saves your spot in the deal. And then we give you access to our portal. And then on the portal, we have the subscription documents in our wiring process. What I'm learning though, and we just learned in this last project, is that, we gave them access via the soft commit form, right? But we lost urgency because we're not essentially requiring them to get through the subscription process first. And so, I've been, having multiple businesses. Here's what I know. And let me get a thumbs up if you know this too. The deal is not done until what? And I've learned this over and over and over and over and over. And I'm like, oh yeah, we closed the deal, whatever, we did this. But here's what I've learned. The deal is not finished until, anybody? Until the money is in hand. That is, as an early business owner, it's one of the lessons I've learned the hard way, is don't count your chickens before they hatch, right? Because the deal's not closed until the money's in. It's funny, I heard a story or read something on Twitter this week, a sponsor was looking for, I got an email actually, and I posted about it on Twitter. That's what it was. I got an email from a sponsor. I didn't know the guy, but he was looking for $17 million in LP capital because one of his LPs, he said, dropped the ball and pulled out at the last minute from the deal. And I had to read that a couple of times, because here's what I found really interesting. That the sponsor said that the LP had dropped the ball because the LP pulled out their capital at the last minute or didn't fund their capital at the last minute. And you know what I read that to be? Now, I almost replied to the guy. Instead, I just posted about it on Twitter. I didn't tweet to him or anything. I didn't include him. But I found it very curious, because what I read in that was that, no, dude, your LP didn't drop the ball. You dropped the ball because you counted money before it was in, before it was secure, before it hit the bank. And so if anyone dropped the ball in the process, it's definitely not the LP or the limited partner or the passive investor. It is the sponsor. And so again, this is just the things that I'm learning. I got to take ownership of this process. Yes, my investors are slow to get through this investor portal, but it's not their fault. It's my fault for not making it easier. It's my fault for not communicating this all the way through, right? It's my fault for not providing clear instructions. And it's really my fault for just even not creating urgency and kind of giving them a way out, in a sense, or letting them off the hook from being speedy and filling out these docs. And so just love that, I'm thankful for this learning experience. This is a cheap learning experience for me, because I've had a lot more expensive learning experiences. Hey, I want to do some live questions. Raise your, I'd love to chat with some of you and really learn what you're doing. I have some questions for you, but also, if you're doing deals right now, you got questions about the market, you got questions about capital raising, you got questions about building systems and processes in a team. If you got questions just about mindset, you got questions about how to more efficiently run your systems and processes. I'm not saying I have all the answers, but I definitely know probably a few folks who do, and would love to either answer or point you in the right direction. Raise your hand at any point during this session today, and we can chat back and forth in terms of in terms of questions that you have. I want this to be a very interactive session today in terms of Q&A and going through some things. And I see, who was that? I don't know who that was, but welcome. Cheryl, you might have sent, I see what you did, Cheryl. You sent the panelists thing out, which is okay. So welcome everyone. I got lots of folks joining as well. And so, Cheryl, I'll tell you what, you would, we can probably just change their role to attendee, which is not a big deal. So if you would go ahead and do that for me, Cheryl, everyone that's not you, just move them to attendee so they, just in case they want to chat with us, they can. I hate for anyone to move this or to end this. Hey, welcome if you're just joining, guys. Pumped that you're here. Hey, raise your hand. I want to do some live Q&A with you, and we're talking about one of the deals that we just did recently and some of the lessons that we've learned, and from a capital raising standpoint. One of my questions was, and let me know in the chat if you've done this, if you've raised over $1 million for a real estate deal, let me know, because I want to ask you some questions today. If you've done over $1 million, if you've raised over $1 million for real estate projects in total, I want to ask you some questions. If you'd be brave enough to come on stage today, raise your hand and let's chat. So go ahead and do that. I see a couple of questions coming in here. So Paul asks, what's the best way to get in deals at GP in order to raise capital outside of finding the deal? Paul, I'm going to bring you up. I'm going to just allow you to talk real quick so we can chat. So Paul, if you would, turn on your mic here and let's chat a little bit. Paul, what's going on?
Hey man, doing well. Ellis, how you doing today?
How are you, man?
Oh, doing very well. Doing very well. Thanks for asking. You hear me okay?
Yeah, I can hear you great, man. What's your question?
So I've been trying to get into some deals as a GP, and certainly been looking underwriting deals and stuff like that. Very challenging, as you know, to find great deals right now. But I'm just trying to find other routes, other avenues that I can get into deal as a GP to raise some funds. So I was trying to ask, what's the best way to get in there as a GP in some of these deals that are happening, across the Southeast and Mid-Atlantic area.
Yeah, great question. Let me ask you this, Paul, right now. If you had the perfect deal, let me ask you this. What would be a great deal to you right now? Like, what would be a deal you'd be like, yeah, I definitely want to do that deal? Like, what would it look like? What would the numbers be on it?
Well, more like a light value add, something in terms of numbers, probably cash and cash. I would say in this market, 7 or better, and IRR probably 14 or better, and yeah, those are probably the numbers I'll be looking at.
Okay, cool. So I've seen 5 of those deals this week. We just raised one this week, and we got probably 2 in the pipeline, very similar. So let me ask you this: if that deal were on your desk today, how much capital could you go raise in the next 7 days? Money in hand, Paul. Like, I'm talking, folks, where money would be in hand 7 days from now.
At least $500,000.
How much?
At least $500,000.
$500,000. So, Paul, I mean, I think, man, honestly, like you're close. I would say you want to try and be really, like, I would say you want to try and secure $1 million or more. I mean, it's hard to bring on another GP to be honest, unless they're doing smaller deals at $500,000, only because, I mean, just another hand in the pot, right? So you want to make sure they're adding significant value to that partnership. You also can't just come in to raise money, right? You know that. So you have to be part of the GP in other roles. But my point is this, Paul, like, get to know guys, man. Start networking. I mean, one of the best ways that we're getting deals done right now, and I have found in my career over the last couple of years, is being a part of masterminds, spending money. I mean, I've spent tens of thousands of bucks traveling to places, being part of communities and masterminds, because what you said is so true. It's so hard to find competitive deals right now, especially in multifamily, that you really need to be around people who have momentum. And if you can go out and raise $500,000 to $1 million, let's call it every couple months, you could be very valuable to a team. And so, I think, man, honestly, like here, I mean, like, for example, we have deals like that. I think $500,000 is a little small, But like if we got to know each other, right, and you said, hey, like Ellis, I don't want to partner with you guys, and you could help bring capital and future deals, we could chat about that. I mean, that's the whole reason, man, we're doing this workshop in Columbia. There'll be over 20 people there. Everyone's learning to raise money and do deals. Events like that have changed my life because it's given me great partnerships to go and do deals with. So all of the projects that we've done this year, Paul, we did not find those deals. The reason we were brought onto that team is because we could raise money, we could underwrite, and we could help with post asset management. So I didn't find any of the projects that we are purchasing this year, and we'll purchase about $30 million of real estate this year.
I appreciate you sharing that, and hopefully I end up down there with Dan and them. I am the co-organizer here in the Washington, D.C. area for MFIN. And of course, on the session the other day, he invited us, down there too. So I'm looking to come down there, end of the week, stuff like that. But certainly, saying $500,000 is what I've already have, from friends and family that I know are serious about it. But I mean, if I delve out there some more, $1 million is definitely, within the grasp, between $1 and $2 million. I could do that, but I just have not gone out there and touched base with some people that I know that is probably very interested, because I don't say, look, here's a live deal, we're going to go with this deal. I mean, if I got a live deal on the hook, there's certain people I would approach that I not get approached that I do know have money and is also willing to invest.
Right. Paul, one of the things too I tell folks is go raise the money before you need it. Like, it's so much easier to go ask for money when you don't need it. Does that make sense? Like, when you're in the deal and you're scrambling, you're trying to get that last 100, 200K, is really, really hard to go get the funds because you're desperate, like you just are. So one of my recommendations for you, man, is first go find someone that has momentum, that's doing deals, right? And the best way to do that is, like I said, join masterminds, go to conferences, whatever. Like, I mean, that's why we have a mastermind, right? For that purpose. And get to know those sponsors, build a relationship. And here's what I would do, man. I would say, again, figure out what that looks like to partner, and get one of their previous investor, like in previous OMs or previous investor decks that shows the deal, shows the layout of the project. And what I would do is I would go to your investor base or your friends or your family, whoever that is. And dude, if it's only like half a dozen people, then sit down with them. Like, go have breakfast with them or go have coffee. Show them what you're looking at investing. Say, hey, I'm going to start investing in these type of deals. Here are the numbers. Here are the returns. Here's how we make money. If I brought you a deal like this next month, 30 days from now, would you want to invest with us? Like, would you want to invest 50K or more into this project? And that way it's very much like non-pressure. They have the opportunity to say yes without actually having to put money in. And I'm telling you, man, if you go do that now, that's going to make you so much more powerful later, because now you're coming to them a second or third time saying, hey, guess what? Crazy. We actually found a project just like the one I showed you. Are you interested?
Right.
And the thing is, you don't have to go create anything, man. You don't need to go create your own deal. You don't need to go create your own deck. Like, just go use the person that you want to partner with, old deals, and show them that.
Sounds like a winner, man. Great advice. I appreciate that so much. I did make a sample deck, but I mean, I think I'll go beyond that. What you're saying is, a deal that probably has already closed or something like that, if I'm hearing it correctly. I mean, go with one of those deals with somebody if the numbers pans out properly. And just, hey, here's the deal. I mean, would it be interesting investing in something like that?
Yeah. By the way, guys, Kingdom REI is like a totally separate company from my investment company. I don't shuttle. Kingdom REI is just our mastermind, our education company. If you want to learn or be on my email list and see what we're doing, go to ellishammond.com. But Paul, one of the things we're doing, and this goes for anyone, Paul, thanks so much, man. I'm pumped that you came on here, brother. Thanks for raising your hand and asking a great question. So one of the things that we're doing that I'm going to be doing over the next 2 weeks, and if you're already in deals, you're already doing deals, even in between deals, again, this is another conversion point. So again, if your only conversion point is, do you want to invest with me or not? Like, if you were here last week, I think that's a terrible idea, because then you just become the guy who's always asking for money. Okay. So if your only conversion point in your investor process is, do you want to invest in projects? like silly. Is not a good, you don't want to be that guy. So one of the things you might consider doing, and if you're on my email list, you'll see this. I'm either going to do it this Sunday or next Sunday. I'll probably do it next Sunday because I'm celebrating my mom's 60th birthday this weekend. So next Sunday, we're going to do a webinar on how to build wealth through multifamily apartments. And it's not a deal webinar, but it is an investor webinar. And essentially it's a way to get folks on a call just like this. And I'm going to walk them through our recent projects, how we found the deals, how we funded the deals, how we're going to make money in the deals. And it's kind of a no pressure way to learn about real estate investing, multifamily investing, an opportunity to subscribe or be a part of my investor club and essentially have first access to our deals. And so it's a way to kind of have a conversion point without saying, write a check. And it's a soft win. It's a way to get some emails in people's inboxes saying, hey, we're doing this webinar. Come learn about multifamily investing, right? So Paul, this is something that you might consider doing, is doing a webinar with the sponsor maybe, and just talking about projects and how they're making money and how they're finding deals and how they treat investors. And so, there's several folks on here. Dylan, I was talking to Dylan this week, and Dylan, this is a great thing, man, for you to continue to do on a monthly basis, is just host webinars about your journey, about your process, about the deal you just did, and how you and your investors are going to make money in this project. And trying, and again, because that's something, by the way, if you're doing a 506B deal versus where you can't broadly solicit, right? If you have a deal under contract and you're going to allow non-accredited investors into your deal and it's 506B, you can't put that on LinkedIn, right? So you can't solicit. So if you're doing an offering, it's a 506B deal and you're going to allow non-accredited investors, which means they're under that $1 million threshold or they don't make the income requirement, and you have an offering, you can't post that anywhere except to people you already know. So what you should be doing in between deals is soliciting or marketing maybe a free webinar just to talk about how to make money in multifamily investing, how to invest passively, right? How to build wealth through apartments, and never, come up with something catchy. How to build wealth through apartments and not become a landlord. Ooh, how to build wealth through rental real estate without becoming a landlord. That sounds like a good webinar. Anybody? I like that. I'm going to use that. So in between deals, I think it's a great idea to be doing webinars like this, because you can put that out on LinkedIn. You can put that on Instagram, Facebook, wherever you do social media, and say, hey, come join this webinar. It's 45 minutes. We're going to talk about live deals we're actually doing or that we've done in the past, how people are making money through rental real estate without becoming a landlord. I'm going to show you how we find deals, how we fund deals. Because here's what I found too, that people who are interested in real estate investing are also make great investors into projects. They make great LPs because they know they already like real estate. They want to put money in real estate. And let's be honest, most people don't realize how much freaking work it is to own rental real estate. Right? They don't realize how much work it is to put together apartment syndication. So if you bring them in and educate them and show them exactly what you're doing, they also may become great investors for you. And so again, if you just want to follow along what I'm doing, go to ellishammond.com, join my email list or become part of my investor base and just follow along. Loved it. Show you and educate you along the way and maybe do some deals together. So that's something that I found works really well in doing some different webinars in between. Again, because like I said, once you're in the deal, one, if you're doing 506B, you can't market it publicly. And two, to like where Paul's at right now, trying to jump in as his first GP. Paul, the biggest mistake I see, man, people trying to get in GP is two things. One is what I just said. They're trying to raise money during a deal the first time. Terrible time to raise capital. That's mistake number one. They haven't already went and done the hard work of finding LPs. They just think they show up once you have a deal. It does not work like that. Two is on the sponsor side, is a sponsor brings you a deal. They're already under contract. Then there's the pressure of like committing to this operator, you haven't done good due diligence. You haven't built a relationship. You don't know what their communication style looks like. You don't really have proper time to vet the opportunity, the market, the asset, right? You're not clear on your structure, your partnership structure, and then you jump into this joint venture with them, and then you go and try and raise the money. It's just a bad combo. And so I would say, like, start now building those relationships with partners. Come to the workshop, you get to know 20 of them. Start building relationships with limited partners or passive investors to do deals with. And then, you're so far ahead of the game. And you just feel better. Because trust me, I've been in the other scenario. The reason I'm sharing this from experience, this is what we did early on. And it just, like, I've learned. I remember being in that first deal and trying to raise money and honestly ran out of people. Like, I just didn't have any more people to call. I couldn't market or publicly solicit because it was 506B. And so I was just stuck. I was out of contacts. And I had not built a list of folks who had already said yes and given me permission to give them a call. So, like, it was just even awkward. Like, I'm calling random people like, hey, I'm an investor now doing deals. And guess what? We have a deal, So you just don't want to be that person. So learn from my mistakes. But great question, Paul. Kind of going on a rant on that. So we'll kill that. What else? Questions, man, about your real estate business, becoming CEO, systems, processes, building teams. Love to hear from you on this. Hey, if you're here and you've raised over $1 million, I want to ask you a question, okay? If you're here and you raised over $1 million for a real estate deal, let me ask you a question. Hey, Dylan, what's up, man? Talk to me.
Hey, I just wanted to see kind of what I know. I'm sure every deal is different, but what's kind of a typical, let's say, GP structure for those kind of and the different team members, whether it's asset management or raising capital, or actually, finding the deal, sponsoring the deal. How does that split typically work in your experience?
It's a good question. I would say it's different depending on deal. But I'll show you. Let me just show you this. Hold on a second. I'm gonna show you an actual breakdown. I will answer your question.
Okay, thank you.
So, can you see this?
Yes.
So this is, like, I would say, a rough kind of way. There's a primary team. And so what we started doing, Dylan, because again, I have two companies, right? I have an equity company where really we just kind of bring the capital to the table. And then we have a syndication team where we're doing a lot of the due diligence up front. We're helping with underwriting. We have some responsibilities too, and on the post close. And so on that 50% portion, what we like to do, Dylan, is negotiate 20% of that. Now, again, we have someone like the other team is doing a lot of the heavy lifting, finding the deal, really kind of working with a property management company, working on lease up. If there's any type of construction, they're typically running point on that as well. But we're doing a lot of the, especially pre-close, and so we're coming in and we want to own or have a equity piece of that. And then the capital portion, I've seen that be marked off anything from 25 or even 20 to 35%. Typically the 25 to 30% is kind of what we're negotiating, and that's if we come in and raise the whole capital stack, which typically we wouldn't want to do because we want other folks to have investors in the deal as well. Mm-hmm. And then 10% is for, and again, if this is in-house, then great, it just goes to the sponsors. But let's say we need to bring somebody else in for liquidity or balance sheet as we pursue more deals. And let's say you're doing more volume of deals, $100,000, $200,000 earnest money and then you got to go another set of earnest money later in the process. It gets expensive, man, right? Like you don't have, like, you run out of liquidity, especially if you're younger and you're just starting out in this business. Liquidity is a serious issue to do deals. I mean, it's why you can't go all in as an LP on your own deals, because if you put all your money as a limited partner in your project, then you don't have money to go secure the next deal. So, you got the liquidity piece. So typically, if we need to bring somebody in for that, we have that carved out for that role. If not, then that just gets split up between the sponsors. Same thing with earnest money, same thing with risk capital. The way we've done earnest money and the way we're going to kind of do this moving forward is, if you want to come in and be a part of our partnership team and raise money, or we need other roles, then we're requiring you to put in earnest money. And so that helps kind of lower the need for cash.
Okay.
And I've learned this from guys like Dan, by the way, who's been a great mentor in this, to kind of share that load. So this is a breakdown that we're kind of using in our community, and I know a lot of folks are kind of using this as a standard. Again, all of this is negotiable. We put this in a contract with our joint venture partners. We lay it out exactly what the roles are, and we both sign it so that it's very clear, and then that gets transferred to an operating agreement, of course. But like, it's not binding, of course, but at least having something visible that we can refer back to and then give to our attorney to put into an operating agreement. We do that with anyone before we like start raising money or something.
Yeah, that's awesome. Thank you for sharing.
Yeah. Good question though, man.
Thank you.
Yeah. So I was just saying, one of the things we do, and I'm not going to show it because I don't think I have a blank one right now, but we put together a joint venture, and I have to give my kudos to my partner Keith in this, who kind of started doing this and put this together. But having a very clear roles, responsibility list, and just so you know what it looks like, we have a left side that has our company and a right side that has their company, and just has roles, responsibilities, and at the top we list essentially what equity percentage we own, what equity percentage they own, and if there's any pro rata of equity on something else. And then there's essentially a target goal of like, hey, we want to target to purchase this much of real estate with you in the next 6 to 12 months, and then we sign it. So it's not complicated, but it's very good to have something that we can refer back to. Is the at-risk money refundable at closing? Paul asked. It can be, Paul. At-risk capital, though, yeah, I mean, it should be, because like if you're paying for legal, at-risk is money like legal, money like if you have to do inspections or, phase 1 inspection, marketing, etc. All that should be reimbursed. Pursuit costs, right? Any type of whatever it takes to go look at the asset. All that should be reimbursed through the acquisition fee and at closing. So yes, it can be. Now, if you're getting equity for that, right? If you're coming in just for at-risk capital, it may get converted to LP shares, right? Or not. You just get equity for that, and you get a percentage of the acquisition. So just kind of depending on how you come in and want to structure it. You could also, instead of being on the GP side for that, you could also just like lend that. Let's call it 5 or 6% or 8% or whatever. A point a month, depending on how long you have that money in the deal. I've seen that too, and just helping sponsors carry that. So just so many ways, man. Once you're in this and you're doing deals, to get creative and get a piece, but that's what it always helps. Like if you already have a balance sheet and you already have a lot of liquidity, like you're in the best position. The harder position is when you have no money and you have no deal flow and you're just trying to get into projects. And So if you already have liquidity in the balance sheet, the net worth, it becomes a lot easier to get into deals that way, because you have something to leverage that people need. So good question there. I hope that answers your question, Paul, too. Let me know if you got any follow-up on that. Hey, good questions here. So welcome again. If you're see a few new faces, we're doing a live Q&A today, just kind of answering questions about this business, about real estate investing, things that we've learned as we're getting into this. Talking a lot about capital raising right now, only because that's kind of the focus of this month. We have a workshop coming up on this Friday down in Columbia, South Carolina. And so we're gonna be talking about raising money, raising capital for deals. And so seems to be the thing that we're talking about a lot right now and learning a ton. Ellis, what are you looking for in a sponsor when you partner? It's a good question. I mean, honestly, deal flow is one. That's really what we're looking for right now, is folks who have momentum. So to Paul's original question, how do you get into the GP? It's hard to find deals. Big thing right now, Todd, is deal flow. We're looking for a partner who can really bring that, because that's what we struggle with. We're looking for a partner, if they're going to bring deal flow, we want them to be boots on the ground in that market. So the 2 joint venture agreements that we have signed and that we have deals under contract currently on, they have deal flow, and their boots on the ground, or they're local to the market that they're bringing us deal flow in. So I really want to see that, and because if we're not going to be there, I want to make sure someone's close to the asset. So I'd say those are 2 really important things. 1, they have deal flow. 2, that they're local to that deal flow. Likability, like ease of communication, is really key to me. We put together the joint venture agreement to have it in writing, but honestly, that's formed before we ever put it down on writing. Like it's just like, do I like you? Honestly, like, could we be friends? Could we go drink a beer together? Is this easy to talk and to communicate? Like, that is so important, especially in these deals, because when you're putting together operating agreement, you're putting together a PPM, there's so much back and forth communication that has to happen to get deals to the finish line, and fast. Because if you know anything about closing deals right now, like, this game happens fast. I mean, you're finding a deal, you're doing due diligence, you're raising all the money in like 60 to 90 days. Okay. So it is a sprint from the time you find a deal to the time you close it, which means from a partnership level, you are always talking back and forth with your partners. And so it's really, really important to me and our team, Todd, that we have people we like, we trust. Like, we would look forward to going to their market. So Kansas City, for example, the deal that we're closing right now, we're going to go there in November. We're going to go to a Monday night football game, the Chiefs versus Giants. We're going to hang out with those guys. We're going to go do dinner. Like, I look forward to that, because we've really enjoyed partnering with these guys. And it's going to be a really good partnership. I think we'll do multiple deals together. So I think those 3 things are really, really key. So someone, the question, in terms of deal flow, do you purchase land as an asset? Yeah, of course, we purchase land as an asset. It's got a building on it that produces cash flow, though. So yeah, we buy the land, but the land has typically an asset on it that is cash flowing. And so that's kind of what we're looking for, whoever asked that question. So if you're asking kind of raw land, no, we haven't done that. I haven't. Not our team. Maybe in the future, maybe some development in the future, but not right now. I don't think we have the capacity to be able to underwrite that, nor do we have the investor base. We don't have the right capital to go do raw land. And I think that's an important piece of the equation, is you have to have the right investor base to go do stuff like that. We just don't have that. Our folks want cash flow. They want a clear business model. So do I. I mean, I attract the type of investors that align with my thesis. So I think your question is probably around raw land, and no, we don't do that. We haven't yet. So part of that is just knowing like what is my team's capacity and what is my investor base's capacity. And so it just wouldn't be in our focus to go do that. I do think that's a big part of this piece of this game. I just, sent this to my team yesterday. Here's a tweet. I'll show it to you. By the way, guys, you're not on Twitter. I'm really liking Twitter. I know it's so random, but I was on LinkedIn for a while, and I think I like Twitter better. So if you're on Twitter, follow me. My handle is Ellis_Hammond. But this is what I read. I saved this and sent it to my team yesterday. It says, this was another guy who's really successful in this game, and he tweeted this. He said, all of my friends who have crushed it have 3 things in common. 1, they're hyper-focused. 2, they're relentless and willing to outwork the competition. And 3, they focus on building a network where everyone can win. And I just thought that so resonated with my journey. 1, they have a focus. So one of the reasons we don't do land or we don't do development or we say no to a lot of stuff is because just not focused. Like we could go do that deal, could go look at an RV park, right? We could go do hotel conversions, but it's just not our focus. And when we try, like for example, we looked at a hotel conversion deal this year, and I just feel like we just pretty much dumped 4 months of our lives. Like we just wasted 4 months of really good energy. And we did no projects in that 4 months. And when we stopped talking about hotel conversions and got back to multifamily real estate in the last 2 months, I mean, we have over $30 million of projects that are in our pipeline right now. So like focus is so key. And when we get out of that focus, and we were talking about one deal, it's like finally, I think we just woke up and like, this is ridiculous. We don't like the joint venture partner. None of us really like the guy. Not really sure why we were in this relationship. We were all just like kind of like the idea of hotel conversions and wanted to do it, but we didn't really like the joint venture partner, and we just friggin' just wasted so much time. So focus is key. You're relentless and willing to outwork the competition. I mean, it's why I'm here today. It's why I'm scheduling a webinar for Sunday. Like, just gonna outwork, gonna be relentless. And then focus on building a network where everyone can win. So being a part of a mastermind, starting a mastermind, doing workshops where you're sharing your secrets. Guys, you come into Columbia or you come to this, I share everything with you. Like, unless I just can't. Why? Because I want you to win. Why do I want you to win? Well, ultimately, I want you to win so that when you win and you experiences win, you associate that back with me, trust is built, and you and I can go win together, right? That maybe Dylan goes and raises a bunch of money next month because of our conversation, or he 10x's his portfolio, which I believe he will in the next 24 months. And he's like, man, I got to give some credit to Ellis. Not that I need that or want that, but my point is maybe Dylan will come back and say, hey, let's do a deal together. Let's go work on a project together, right? So creating win-wins with folks around you and giving them a position to win. That's what's key. And I really want that for you guys. It's why I know Dan is doing this workshop with me this week. Do you think a guy who's over $500 million of assets is raised over $100 million this year from private investors really has time to do a workshop for $3,000 to $5,000 a person? Just if you bought a ticket for this event, by the way, I want you to know, like you are going to learn some stuff. Like you are tapping into some secrets, and you are getting a man's time that you probably should be paying $30,000 to $50,000 for. Like you've really, like, you're getting something special. And because I think Dan's similar in that he's just creating a network for win-win. You know, the whole multifamily investor nation network that Dan founded, think about that network. It's a platform where people can come in and spotlight their own company, right? Like Dan created his summit, MFIN summit, where I speak at every year. I get to promote me and my company. It's a win. Like Dan wins because I bring a lot of folks to that summit that learn about his company, but he brings a lot of people from the network that learn about me. And so it's a win-win. Like, figure out if you want to be a long-time player in this game, like figure out how to create a platform, a network where people can win because they know you. I mean, that's what Kingdom Real Estate Investors is all about, Kingdom REI. I want everyone in my community to win. I want them to be bigger than me. I want them to be more profitable than me. I want them to have more investors than me. No, they're going to have to work hard for that, but I just want to create a network where people can win. I want people to do deals together. Because I'm going to be around this industry for a long time. And when I'm gone or I'm not in this industry, I want my daughter to reap not just from the cash flow of my real estate, but from the relationship equity that I've built over decades. And so consider how you're creating wins for people. And anything else before we get out of here? Guys, thanks for being here. Thanks for showing up. Thanks for being a great audience and asking great questions. Really getting to learn from each other. All right. Bye, everyone. Hey, by the way, we got a YouTube channel. Type in Kingdom Real Estate Investing. All of this stuff is on replay. We have so many good stuff on that channel right now. I mean, we are building a stinking library of just amazingly good content. Interviews, this type of stuff. So type in Kingdom Real Estate Investing on our YouTube page. All right, y'all. We're out.